Hello and welcome everyone to Silver Asset of the Day for the 5th of November 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get towards the end of the week here, what do you need to be aware of? So first of all, in the last week, hedge funds and money managers, they've increased their net long position on silver by 7%. So of those funds that have a position on silver, 69% are currently long. This week, as with gold, silver has been very range bound. It's found support at $23 per ounce and resistance at $24 per ounce. Much like we mentioned on gold this week, we were expecting consolidation, range bound price action. You've essentially seen gold overshoot slightly support at 1770, coming down to 1760, but closing back again above 1770, and then on Thursday breaking back out towards 1800, exactly as we talked you through on Tuesday's Gold Asset of the Day. We're looking for that range bound price action back towards $1,814 per ounce. We may get that on Friday with the volatility from the non-farm payroll data. Now, as we discussed with you on Gold Asset of the Day, be mindful that with silver, for the last 7 years in a row, from the 5th of November onwards until the end of the month, silver has sold off anywhere between 2.5% to a 10% move to the downside. So this time of year, once you've got Friday's non-farm payroll data out of the way, once we get towards the close, we've tended to see over the last 7 years pressure to the downside throughout the rest of November. And it's very similar with gold. Once you get that non-farm payroll data out of the way, typically you tend to see gold under pressure throughout the rest of November, which sets up for some great opportunities as we transition into the month of December. Now, as we talked you through previously, great opportunities we've seen over the last week have been natural gas, where we banked over 2,000 points from 2 trades. So of course, every 1 lot contract that you'll be trading, that's over $20,000 of profit. For every 10 contracts you'll be trading, that's $200,000 of profit. We've also taken the opportunity on the recent sell-off with copper and palladium to build further positions at lower prices. Typically throughout the month of November, both of those perform very well. That dollar strength can also add more pressure to the downside for gold and silver once we get going throughout the month of November. Just be mindful that usually the setup, which does lead to the sell-off on the metals, is a bull trap. That essentially means you typically get a spike to the upside, which tends to lure traders in to buying at higher prices. They tend to FOMO in only to see the price get slammed throughout the rest of November. Now, this comes down to utilizing a research-driven approach in the market, where you're utilizing data, market intelligence, statistics, awareness of the daily, the weekly, the monthly, the quarterly cycles for each commodity, the intermarket correlations, the ratios in the market, the capital flows, sentiment, and of course, awareness of the biggest news items, which will be catalysts for the fastest moves with commodities, providing those very quick impulse moves that you can capitalize on extremely quickly. And of course, awareness of how hedge funds, money managers, banks, and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.